Welcome to the market review program for midweek. Today is September 9th, 2020. Well, if you're in Lagos, it's already raining, and I know that that always has its own impact. But across the world, you're welcome to an interesting conversation as we look at this segment of the market, the private equity and venture capital space, which is a very important aspect of financing and capital for a clime like Nigeria. Today, we'll be looking at the regulations and the private equity investments in Nigeria. You agree with me that regulations will play a key role in how we attract more capital into the country, especially the appetite of private equity investors and venture capital firms. We need to continue this conversation. Back again for this week is Mr. Oluyemi Rufai. He's the head SME Advisory for First City Monument Bank. Nice to have you back this week, Mr. Oluyemi Rufai.
Yes, good morning, Ottoabasi.
Yes.
It's a pleasure to be here once again. Thank you.
Yes. It has been said that the environment is very important, the regulatory environment. And I've noticed that for G7 economies and even the Nordic economies, they seem to have this very clear understanding of how the regulatory environment, the policy environment can work to encourage and attract more private equity investments and venture capital activities that particularly support the growth of micro, small, and medium enterprises. What are those things that, based on your experience, you've seen that stands out from the way the environment works for supporting investments?
Yes, thank you. For that. I want us to, take a look at what happened in Nigeria a few years ago, right? So if you go back to early 90s, late 80s, early 90s, right? There were, all kinds of banks in Nigeria at that time. And then until the late 80s when the then head of state, right, deregulated the sector. What did you then find? They created...
Sorry, was that General Sani Abacha?
I think it was, Ibrahim Babangida.
Babangida, right? Yes.
Exactly, right? At that time, it was only whole generational banks that we had in the country. The sort of services that Nigerians, were, given, is something that was questioned at that time. And so what then happened? They created, some policy environment that made it possible for investors, right, to come into that sector and change the dynamics completely. That gave birth to the kinds of banks, the types of banks, new generational banks that we have today. And if you check in terms of performance from that time between 1990 until date, those banks that were able to come into this space.
Yes.
You have a merchant bank like the bank institution I work with today. At that time, right, most banks brought in about $4 million US, $4 to $5 million US. That was their share capital. That was their total asset. Today, the institution I work with, for instance, sits on over $4 billion US. So you can imagine just deregulating the banking sector.
That's singular policy state decision.
Exactly, right. Allowing private sector to be able to play actively and deliver banking services in an excellent manner, in an excellent way, gave birth to different new generational banks that we have today. That's, if you look at the return on investment, it's over 1,000% over a 30-year period. And for some other banks, maybe over 1,000, maybe 2,000% return on investment. So that bodes well for investors, right? When private investors are able to play, and the regulators are not, coming in to stifle innovation, coming in to stifle, performance and product structuring. Now, fast forward to 1999, we had the telecom sector, right?
Yeah.
Nigerians had less than 200,000 lines at that time, connected to the whole NITEL, as it were at that time. And then, the president at that time, with the regulators, then NCC, were able to open up the industry, the telecoms, industry to private
liberalize it.
They liberalized it, exactly.
Yeah.
That brought in huge capital inflow, running into hundreds of millions of dollars. I mean, I remember the license fee at that time, was over 100 million US dollars, right? Because of the fact that the fiscal policy regime at that time were quite open to private investment and innovation. It made it possible for Nigeria to attract the likes of Econet, and then MTN came in, and then a few years later we had Glo, coming to also disrupt the telecom sector. So largely, funds are always available, right, globally. Funds have never been the challenge, in any economy. Private equity funds run into trillions of dollars globally.
Yes.
Right. So, and then look at what has happened between 1999 2000, 20 years ago. You can imagine the sort of jobs, thousands, millions of Nigerians that are now empowered. Wealth has been created, distributed, around telecoms industry. And then, of course, you have other ancillary sectors that have come out from that singular act. You have the value-added services segment of that industry, also creating thousands of jobs. You have those that are now even supporting banking sector through USSD codes. Today, banks and other sectors rely solely on telecoms network providers. You have the likes of One coming in that space.
With the infrastructure,
exactly, to deliver on the infrastructure side of the telecom space, communication space. And if you actually check economy, these two sectors I've mentioned, banking and telecoms, are largely the most celebrated sectors in our economy. Because
even the capital markets too.
Exactly. If you go to the equities market, the stocks that a lot of investors usually latch on to are the banking industry stocks. And of course, now that we have a few telecoms players join, it's doing very fine. And so that's the same model and approach that usually investors are always looking out for. There has been, largely very consistent policy drive within those two sectors. NCC has been doing a great job making sure that they don't stifle the players in that space. And same thing with the CBN. Banking in Nigeria is one of the most regulated sectors in Nigeria. In fact, some people even say that banking in Nigeria is more regulated than it is in other climes. But
so Oluyemi, sorry to cut in, but you mentioned the bank.
I really like the analogy you've given, because I mean it's always good to have a good historical perspective on how policies can really attract private equity and venture capital investment. You started very well with the banking sector deregulation. You went on to the liberalization of the telecommunications sector. But there are two sectors today that are very critical, but still having that challenge of getting the whole nexus of the regulation and the value, or liberalization and the value that is expected. That's the power sector, where there was an attempt in 2013 to liberalize it. It was liberalized. We have distribution companies, we have generation companies, and we have the transmission company, which is still wholly state-driven. And then, of course, the oil and gas sector, very big sector too, that recently engaging experts and even in webinars is weak in terms of the regulatory environment and the approach. So I'd just like you to speak to these two sectors, because I know that a lot of private equity and venture capital investors have put in several investment and funds are watching how it will play out.
Yes, interestingly, power sector, has been bundled into three different, buckets. So you have the GENCOs, right?
Yeah.
Today, it's privatized, only, owned by private sector. Then you have the distribution arm. You have the transmission arm, which is still 100% owned by government. And then the distribution side, the discos, 40% owned by government and then 60% owned by the private sector. The challenges within the power sector seem to be a bit complex, more than what you find in the telecom space, where one entity can actually own all the critical assets that is required to deliver to the end user across the value chain. In power sector, you have an interdependency between the GENCOs, the Transco, and then the discos. Right. So, from my own perspective, it's clear that Nigerians currently power their businesses, their homes, their companies using alternative sources of power, which cost them a lot. I mean, World Bank reports that today Nigerians generate more than 14 gigawatt, of power for themselves. Meanwhile, the grid only supplies about 5,000 megawatt, about 5 gigawatt of power. When you study the power sector of Nigeria very critically, you would find out that one of the critical challenges holding back the progress in that sector is the infrastructure or asset within the transmission segment. Yes, so the infrastructure in the transmission arm, that's the one in the middle, it's actually a bit moribund and requires investment. And I'm happy that that's part of what the government is looking at from their partnership with Siemens. Hopefully, Siemens can come in and then, come up with some more improved transmission assets, infrastructure within that power sector. But outside of that, you have issues around the generation of power, right? Whereby there are still some regulatory concerns around who owns which asset, what type of stock supply are you going to rely on, and then on the distribution angle, you have issues around tariffs, right? I just recently, NERC, the regulator, has just come up with the service reflective tariff system, trying to move away from cost reflective because the end users have come against the fact that they don't have meters, they don't have prepaid meters, and so why should you then begin to increase their tariff? But largely, again, once government removes their hand from the transmission segment of that value chain, right, and allow private investors to come in, and also the distribution side, there needs to be clarity on tariff. There needs to be clarity on service delivery. There needs to be clarity on who does what, right? When will the end users be given prepaid meters? And so those clarities are missing. That's why there's a lot of back and forth. Again,
in terms of investments and even
scaling. Exactly. So the end users are willing to pay. I mean, they currently power their homes, their businesses by themselves. Burning fossil fuel, right? Meanwhile, the government is having issues around tariff, right? Around the prepaid meters, right? So those issues have to be resolved. It's a chicken and egg situation, right? The discourse are saying that they supply you meters without a cost reflective tariff first. the end users are saying, please provide us improved service, and then we'll pay for it. And so, the government needs to bring critical stakeholders together and find a lasting solution to that space. There is a huge funding available, right? The funding is waiting for clarity of policy and purpose. So same is applicable to the oil and gas space. You see a lot of the international oil companies, right? They are, looking at divesting their assets away from onshore assets to offshore assets. Of course, we know what the challenges that they are faced with. The challenges include, security issues that they have, and of course, in terms of return on investment, it pays them more to explore, offshore than onshore, even though it costs them more to be able to actually find oil offshore. And so those are some of the issues that we have. In terms of the PSC sharing formula, petroleum sharing, contract that we signed with the IOCs.
Auction sharing contract, yes.
Exactly. That's largely on onshore assets, right? It's not really targeted at offshore assets, and so we need to sit down and just like the government has done very well reviewing the Corporate and Allied Matters Act
2020,
after it has been there for many decades. So there's need to also do the same thing for the power sector, do the same thing for the oil and gas sector, so that we can release funding from private sector.
And even in the oil and gas sector, we still
investments like the Dangote Petrochemical Refinery. Private equity companies like Carlyle Group, big companies, I think Blackstone and the rest, have been also looking at projects like that. Again, that shows that the private equity investors really keep faith with Nigeria, but like you said, the regulation in that space also is very important.
Yes, absolutely. You have an economy that is growing. If you go by different reports, Nigeria's population will largely become the third most populated country in the world, if not second, in the next few years. By 2050, we're projected to have a population of about 400 million people. Slightly above the United States. Only China and India will be ahead of us. So it means that there is a huge market, right? In terms of purchasing power, within that 200 million people, of course, you can then begin to put some percentage to that. In terms of even if it's 10% of that population that you have today, say 10% of 200 million people, that's 20 million people, right? That have the purchasing power, right, to consume your product or services. That 20 million, guess what, is still largely bigger than a lot of European countries. Norway today is just about 5-6 million people. Finland, go around Europe. Only Germany, Italy, and France have very huge markets, right? And so Nigerian market is huge, is growing, right? Once we're able to put our fiscal policy environment together, you begin to see us attract a lot of investment, a lot of capital. First thing we need to try to focus on is import substitution. You mentioned the oil and gas, petrochemical industry and refineries that we're trying to develop. Fantastic projects, which the banks are also pulling their weight to support. What you find, is that it's going to actually have a positive impact on foreign exchange earnings for Nigeria. Today, we actually spend hundreds of millions of dollars importing fuel, annually, if not monthly. And so what you find by the time those refineries kick off will be that those foreign exchange that we have to then use to, import PMS and other petrochemical, commodities, we will then, be able to have them internally. Same thing with all the other sectors that we are largely import dependent on. we have a comparative advantage in terms of population, right? So labor is there. In terms of a market, the market is right. In terms of funding is available. Funding is usually available, right? So what we need to put together is clear policy statements, expansionary fiscal policies, right? That will enable private investors, both domestic and foreign investors, to be able to bring in their funds with clarity of purpose, take the risk that they need to take, and earn their returns on investment.
So in essence, you say that we need expansionary fiscal policies to really incentivize such investments.
Absolutely. What you find in developed climes is situations whereby, and we can leverage and learn from them. We don't necessarily have to copy what they've done and just paste in Nigeria.
Yes. Not a copy and paste situation. Yeah, right? Like situated as
do is to learn from their models, right? Exactly.
Models, okay.
Exactly. So what we need to do is to incentivize individuals, businesses, right, and investors. How do you incentivize them so that they can create jobs, they can risk their capital? One of the ways to do that will be, tax reliefs. So there are some sectors that have huge multiplier effect on the economy. Rather than increasing the taxes, rather than increasing tariffs, what you can then begin to look at is some tax holidays for those specific sectors. Sectors like you mentioned, power sector. You have renewable energy space there. Rather than increase the import duties on solar panels, what the government can do to attract more investment, more capital to that segment of the power sector is
provide fiscal incentives like tax holidays.
Incentivize people that are bringing it in. In fact, incentivize those companies that are able to start manufacturing, if not manufacturing those components, at least they're putting it together here locally in Nigeria, thereby creating jobs. Right? I understand the fact that the government is challenged in terms of fiscal revenues today because of the dip in crude oil prices, right? However,
the impact of COVID too.
Impact of COVID. However, most developed countries, depend largely on taxes. That's where they earn most of their fiscal revenues. And how do you do that? You've got to create enabling environment for investors, private, investors, local, foreign investors through, expansionary fiscal policies, like we've mentioned, tax, holidays for specific sectors that have huge multiplier effect. The housing, sector, the power, sector, agribusiness sector, right? Healthcare, education. These are sectors that have huge multiplier, implications on the citizens that are here in Nigeria, right? You want investors to be able to bring in their funds, create jobs, right? Bring in patient capital over a period of 5 years, over a period of 7 years. I mean, these are going to be patient capital that by that time, right, more jobs will have been created. When these investors want to then repatriate their capital, they have much confidence that, yes, there won't be issues around monetary policies. And again, that speaks to the monetary policy,
environment, particularly the foreign exchange management, which a lot of investors have been watching. I mean, what would you say to that, Mr. Oluyemi Rufai? We've tried to talk about this last time, but
exactly.
the FX environment, the Central Bank of Nigeria just resumed sales of Forex to BDCs, that's Bureau de Change companies, and people are beginning to see the Naira gain some ground. But in terms of the FX management approach, what is the best that can really incentivize investments from PE and VC firms?
Yes, thank you very much. We can't shy away from the real solution to this problem, right? Which is that we've got to look at areas of comparative advantage locally. Agriculture, right, is one of our areas of comparative advantage. Today, we still import rice, we still import tomato, we still import most of the food commodities that we consume locally. We need the fiscal side to incentivize private investors, right, to be able to bring in their funds, like we mentioned earlier, so that they can create factories, industries, right, that can create jobs and then begin to serve our local market. The market is large. Do you understand? The market is very huge. That's one way that we've talked about. The monetary policy, environment also then need to incentivize the investors. Now, how do you incentivize investors? Of course, in terms of rates. Now, you have two different ways through which we can attract investment into Nigeria. You have the FPI, foreign portfolio investment, right? And then you have the FDI, foreign direct investment. FPI usually is for short term, hot money.
It's called hot money,
Exactly. And the FDIs, are largely the ones for productive, activities.
Real impact on the economy.
In terms economy. So what's happening in the FX market today is the fact that the government relies so much on a monoproduct to earn foreign exchange,
that's crude
right,
oil,
which is crude oil. So immediately once crude oil price dips, earnings drop. Once it drops, we begin to run to our foreign exchange reserves to be able to meet our import needs. Remember, Nigeria is also largely import dependent. So most of the things we consume locally are imported, right? And so there's no country outside of Nigeria that accepts naira. So so let's break it down into practical. If you go to the US, if you go to the UK or China, you'll probably not be able to spend your naira. You won't be able to spend your naira. Which means if you're going to purchase anything on Amazon, if you're going to buy something from Alibaba, if you're going to buy anything on Facebook, you need your intermediary, that's the bank, to be able to provide that ability for you to convert your local currency naira to dollars. Can you see it? So those of us that consume Netflix, those of us that buy books on Amazon, those of us that pay for marketing ads, spaces on Facebook to advertise our product and service offerings, we are paying in dollars, and we rely on our intermediaries to be able to do that conversion for us, which means that until we are able to begin to produce competitively locally, right? Once we begin to produce competitively locally, that's when some of these dependency on imported goods will reduce, which means that we will now rely less on having to source for dollars. Look at what's going on within the healthcare space. Before the pandemic, there's usually huge outflow for medical tourism. Why is this so? Because of the fact that there's huge challenge within our healthcare space, right? Same thing for education. You see a lot of Nigerians sending their kids outside the country for studies. Why is that so? Because they don't they no longer believe in the educational system of the country. And so that falls on the fiscal policy environment, right, to be able to create that environment for the country. Then we're talking about foreign exchange, right? We've mentioned the fact that we need to look inwards. We need the government, first of all, needs to be able to diversify, create an enabling environment to earn more taxes, right? When you create an enabling environment for private equity investment and VCs, then they can create jobs. People that earn income will pay PIT. Companies that are funded will begin to pay corporate 30% corporate taxes, right? And so government begin to earn more. So the dependency on crude oil sales will then go down, and then government can then begin to earn more money, through that route. In terms of monetary policy, yes.
Yes, I guess that you really covered that.
As we begin to wrap up, just in 30 seconds, this market economic approach we're taking now for the facing and of the subsidy and the regulation in the oil and gas sector, and of course we're seeing what's happening in the energy, electricity space. What in 1 or 2 words would you like to say is the pathway going forward? And what do you want to tell investors watching this segment?
Yes. So there's huge opportunity in the market. I just talked about the banking, space, that made over 1,000% return on investment. What we need in our economy is patient capital, that will be able to, last for 7 years, 10 years, right? So that we can develop critical sectors that have huge multiplier effect on job creation that will then have positive impact on, tax revenues for state government and for federal government. However, there needs to be continuous coordination between monetary policy, regulators and the fiscal policy players. They need to harmonize their attempt, to create an enabling environment for investors. And because Nigerian population keeps growing, it builds well for investors to come in to bring in their funds and invest with Nigeria.
Thank you very much, Mr. Oluyemi Rufai.
You've said expansionary fiscal policy is very critical. We need patient capital also to come into the economy. I must say that a lot of major private equity companies like Carlyle and even Blackstone, based on their investment even in the Dangote petrochemical refinery projects, are really bullish on Nigeria. But of course, we agree, like you've said, coordination between fiscal and monetary policies will be very key to attracting much and much billion-dollar investments from PE and VCs. Thank you once again for the time, for discussing regulations and private equity investments in Nigeria. Hope to have you subsequently to discuss more around how we can make this work for economy, the activities of PE and VCs. Thank you. Mr. Oluyemi Rufai, Head SME Advisory, First City Monument Bank. Thank you once again. And that'll be all for this edition of the Market Review, who will bring developments in the financial and capital markets related to our economy. Join our website, www.prochange.com, to watch our videos, read our news reports and analysis. Let's make this happen again tomorrow, same time, 10 a.m. Till we come your way again, thank you for watching. Have a nice day and stay safe.